Welcome to TalkTickers. We're doing a deep dive today into Aon PLC, looking at their first quarter 2025 earnings call. We're going to unpack the key numbers, get into what management's saying about the market, and look at their outlook.
Yeah, absolutely. So starting with the headlines, Aon reported, pretty solid mid-single-digit organic revenue growth, came in at 5%.
Okay, 5%.
And total revenue, that saw a really big jump, 16%. But that was mainly driven by the NFP acquisition they recently closed.
Right, that makes sense. And profitability.
Adjusted operating income margin was 38.4%. Adjusted EPS landed at $5.67. And free cash flow, that came in at $84 million for the quarter.
And I saw something about the dividend, too.
Yes, big news there. They announced a 10% increase in the quarterly dividend. That's actually the 15th year in a row they've increased it.
15 years, wow. Okay, so that 5% organic growth, you said it was solid. Was it spread out, or did one area really carry it?
No, it was pretty broad-based, actually. You had commercial risk and health solutions both hitting 5% organic growth. Reinsurance was slightly lower at 4%, and wealth solutions actually led the pack with 8% growth.
Okay, let's break those down a bit. Commercial risk at 5%. What was behind that?
Well, they saw good strength in their international P&C business, property and casualty, and also in North American core P&C. Deal activity, M&A stuff, was apparently a bit slower initially, but the M&A services side still gave them a modest boost.
So more from existing lines and new clients then?
Exactly. Primarily new business wins and strong client retention. They mentioned their 3x3 plan helping there, and also their risk capital analyzers.
Yeah.
Market impact, things like pricing and exposure levels, that was apparently pretty much what they expected.
Got it. And reinsurance at 4%. Slightly softer.
Yeah, 4%. Growth there came from treaty placements, and they had double-digit growth in facultative placements and also insurance-linked securities. But that was offset a bit. They had a big multi-year deal extension with a major client. Yeah, involved higher limits, but also an adjusted commission structure. So it kind of impacted the Q1 timing, but they see it as a big long-term win.
Makes sense. But are they seeing the market soften there?
They are expecting some softness in Q2. They mentioned property rate declines in the U.S. and Japan around the April 1 renewals. But importantly, they still expect full-year organic growth for reinsurance to hit their guidance, anticipating a stronger second half.
Okay. And health solutions also at 5%?
Yep, 5% there too.
Mm-hmm.
That was mainly driven by double-digit growth in their core health and benefits business, especially strong internationally, fueled by new business wins and, rising healthcare costs, which always helps demand.
Right. And talent.
Talent saw high single-digit growth in advisory work. That was good, but it was offset by lower data analytics sales, apparently due to just the timing of deliveries. They still expect mid-single-digit or maybe even better growth for the full year in talent, though.
And wealth, the leader at 8%. What was the story there?
Strong quarter for wealth, primarily driven by asset inflows from NFP, the acquisition. Also market performance helped, and some regulatory work happening in the UK and their AMIA region.
AMI.
Yeah, Africa, right. Middle East, India, Australia. But they did flag that Q2 will be a tougher comparison because Q2 last year was particularly strong for wealth.
Okay, good context. Let's pivot to profitability then. You mentioned the 38.4% margin. That was down slightly from last year, wasn't it?
It was, yeah. Adjusted operating income was actually up 12% to $1.8 billion, which is strong. But the margin percentage, 38.4%, was down from Q1 2024.
And the reasons?
Two main things. The impact of bringing NFP into the numbers, which naturally has a different margin profile initially, and lower fiduciary investment income. That income was down about 15% because interest rates were lower compared to last year.
But underlying, if you strip that out.
That's the key point.
Yeah.
The underlying core business actually saw margin expansion, savings from their big restructuring effort, the Aon United program, that contributed about 85 basis points to margin improvement just in Q1.
And they're on track with that program.
Seems so. They expect $150 million in savings this year, 2025, and they're aiming for a $350 million run rate in savings by 2026.
So despite the headline dip, they're still confident on full-year margin.
They are. They explicitly reaffirmed their goal of 80 to 90 basis points of adjusted operating margin expansion for the full year 2025. And they made a point, actually, that if you excluded the NFP impact for the 3 months in the prior year comparison, Q1 margin expansion would have been over 100 basis points.
Okay, that's a helpful clarification. What about capital allocation? Free cash flow was $84 million.
Yeah, $84 million in Q1. They're expecting double-digit growth for the full year, though. And looking further out, a double-digit compound annual growth rate for free cash flow from 2023 through 2026.
And leverage with the NFP deal done.
Leverage is currently at 3.5 times. Their target is to get that down into the 2.8 to 3.0 times range by the end of this year, Q4 2025.
Are they still doing acquisitions?
Yep.
Or pausing after NFP?
Still active, but more targeted tuck-ins, primarily through NFP itself. They acquired about $19 million in EBITDA in Q1, expecting maybe $45 to $60 million total for the year in those kinds of deals. The pipeline, they said, is still strong, especially in commercial risk areas.
And shareholder returns.
Still a focus. Returned $397 million in Q1. That was through dividends and about $250 million in share repurchases. And as we mentioned, that 10% dividend hike announced in April.
Okay, so looking ahead, what's the overall outlook? Did they stick to their guidance?
Yes, they reaffirmed the full year 2025 guidance across the board. So that's the mid-single digit or greater organic revenue growth.
Right.
The 80 to 90 basis points of margin expansion, strong EPS growth, and that double-digit free cash flow growth we talked about.
And any commentary on the macro environment? It's still pretty complex out there.
Absolutely. They highlighted that complexity, focusing on what they call the 4 megatrends: trade, technology, weather, and workforce. Apparently, trade dynamics are particularly top of line for clients right now.
Interesting. And they feel well positioned for that.
That's the message. They believe their advice and solutions are becoming even more valuable in this kind of environment. Critically, they said they haven't seen any real pullback in demand.
Good sign. Any specific guidance for Q2?
They gave an estimate for Q2 adjusted EPS growth, expecting it to be in the range of 15 to 18%. That's compared to the $2.93 they reported back in Q2 of 2024.
Okay. And they mentioned an investor day coming up.
Yeah, June 9th. It's actually their first one in about 20 years, apparently.
Wow. Okay.
The focus will be on the next generation client experience, talking about their Aon United platform, ABS capabilities, likely actuarial and benefit solutions, and that 3x3 plan again.
Sounds like a significant event then.
Yeah.
So bringing it all together, what's the main takeaway for someone tracking Aon after this quarter?
I think the key thing is that consistency in organic growth. Achieving that 5% broad-based, especially while integrating a massive acquisition like NFP and dealing with all the macro uncertainty, it really speaks to the resilience of their model.
Yeah, that stands out.
And their focus on winning new business, holding on to clients, investing in tech and talent, it suggests they're being proactive, not just reactive.
The reaffirmed guidance helps too, adds confidence.
Definitely. It signals they believe they can execute even with market volatility. Plus the commitment to capital returns, the dividend hike, the buybacks, that's always something investors look for.
And that investor day sounds like one to watch for deeper strategic insights.
For sure. It could offer a much clearer picture of their long-term vision and how they plan to stay ahead.
All right, time for our favorite segment. This is not financial advice, where we toss around an outrageous but plausible trade idea based on the call. What have you got?
Okay, so leaning into that theme, Aon highlighted the complexity around global trade and supply chains.
The mega trend focus.
Exactly. And Aon's role in helping clients navigate that, plus their growing international presence. Here's a thought, purely speculative, remember?
Always.
What about looking at, say, a global ETF focused specifically on cybersecurity companies that specialize in supply chain security?
Interesting angle. Why that specifically?
Well, as trade routes shift and supply chains get more complex, maybe more dispersed, the need to protect them from cyber threats just skyrockets, doesn't it? It's a huge potential vulnerability.
Makes sense. A potential growth area linked to that trade complexity trend.
Right. And maybe, just maybe, to add a hedge or play the other side, you could think about a short position in, say, an index of very traditional, maybe less tech-savvy freight forwarding companies. Those potentially face disruption from newer, more agile, tech-driven logistics players, better equipped for these new complexities.
So playing the potential winners and losers from supply chain transformation and the related security needs.
Kind of captures that dynamic. Again, totally a thought experiment, not advice.
Yeah.
You absolutely need to do your own research.
Got it. A fascinating idea linking back to Aon's commentary on trade. Okay, that wraps up our rapid-fire deep dive into Aon's first quarter 2025 earnings. We hit the key results, the strategic drivers, and hopefully sparked some thought with that trade idea. What stood out most to you listening in? Any areas you want us to explore more next time? Definitely let us know. And keep tuning in to TalkTickers for more concise breakdowns of the financial news that matters.